The broadcast is now starting. All attendees are in listen-only mode.
Okay, let's see. Good afternoon, everyone. Today is August 22nd. It's about 10 to 1 Chicago time. Again, we're going to, this is another episode of CFRN Thursday, where we're going to go over the CFRN trade setup, but in slow motion. So the idea is, number one, first part of it is I'm going to go over some of the disclaimers that I have to point to you before I can present. Secondly, I'll break down the trade setup in slow motion. And third, we'll pop into a live environment and we'll look for the same setup, and we'll look for the setup and put trades on and manage them and take them off. And here we go. My mouse is sticking here. So that's the idea. So we'll get into a live environment, and I'll go inside the DOM here, and I'll do some buying and selling, and I'll show you how to set it up, how to do that, how to trail the stop, and when to exit from start to finish. Okay. The fact that this computer is running real slow, maybe I should shut some things off here. I'm going to shut down the live right now, go into demo mode, see if I'm going to shut some other things off. I think that should be good. All right, anyways, I'm in demo mode. All right, so just to be very clear about this. So like I said, the idea is, especially the guys that are brand new, this is going to be a great cheat sheet or syllabus for you to lean on, because I am going to go over the setup that Michael uses in the morning, and I'm going to break it down. We're going to go over some of the setup and some of the buzzwords you'll hear in the room. So when you are taking the trial, you can absorb what's going on maybe a little bit quicker than the 5 days. Okay. In addition to that, it's going to give you an eyes wide open approach of what to expect. Okay. You are going to be scalping. There's some rules involved. There's stop losses. I'm going to show you how to enter trades. Again, the idea is to give you, set some expectations. So when that trial is over and you do get an offering from CFRN, you hopefully absorb, your gut tells you a little bit more. Okay, hey, this is what I'm expecting to do. This is the setup. Can I do the setup? Am I comfortable doing this? Am I getting the support? We're going to go over all that. So, at the end of the trial, if you're ready to push the PayPal button and move forward, at least you have an eyes wide open approach in doing that. So that's the goal for the brand new guys. The guys that are CFRN members, you're going to get a chance to hang out with me for a little bit, and we'll give you a chance to ask questions. I'm going to go over some of the traps that some of the members do fall into. Remember, I've been in there from day one. I'm in the room every single day. I'm just in the background, just kind of hanging out. Okay. So I know I've seen plenty of screenshots over the years to kind of say, hey, these are kind of the similar things that people are falling into. And if you're spinning your wheels, these 3 or 4 things that I will earmark will probably be some of the things that you'll say, ooh, and he hit on a topic that really is kind of hurting me right now. So my goal for you guys is really to point those out and keep you out of those sand traps ahead of time. Okay. Unfortunately, you have to step in at first to realize you're in trouble, and then you can work your way out of it, hopefully. Okay. So you guys will have a chance to ask me questions and stuff like that. Okay. Yeah, and I think that's it. So we'll spend about an hour in here. Okay. I think there's some market activity here. So if a trade setup does develop, we can walk through it from start to finish in slow motion, and and we'll go from there. Okay. All right. So again, if I'm going to move the question box over. So if you have questions, just fire away. If I don't answer it right away, I'm not ignoring it. I will get to it. The other thing is, my phones will buzz. All right. Someone will end up calling in the middle of this thing. So I will put you on hold to hit the mute button and then answer the phone. So I just wanted to give you a heads up ahead of time. So if you hear a little bit of silence in the background, it's because I'm picking up the phone and talking to somebody about markets. Okay. So with that said, let's start with what I have to do first before I can present, which are the disclaimers. Okay. Again, I've been around for almost 25 years. I really have seen the good, the bad, and the ugly when it comes to trading. So I don't take the disclaimer part lightly. I will go over it. I'm going to talk about it for 5 minutes. But the idea is really, it's kind of a warning label here for those guys that are brand new that are entering our space, because you're dealing with a leveraged market. Okay. So one of the things that are highlighted in this few paragraphs here really is, if you don't have a trading plan, if you're not using stop losses, if you're ignoring your trading account, ignoring your position, ignoring the rules, any orders that you have outstanding, if you really are not paying attention, you can lose everything and some in your trading account. Okay, so that means if you have a $5,000 account and someone comes out and tweets something that's not very market friendly, yeah, you can lose your $5,000 and some if you don't have stop loss, if you don't have a trading plan and all that. Okay, so I know this isn't a great way to start a webinar, but the goal of this webinar really was to give you an eyes wide open approach to what to expect with CFRN, and also is, what to expect about trading. There's guys that are in the audience that are brand new that don't know anything about this, and this is a warning label, and it should be talked about. So that's why we're here, eyes wide open approach, and it starts with here the disclaimer. Okay. Good thing is, the positive spin on this is that with CFRN, you do have a trading plan, right? We're going to go over the rules. Okay, so you have a set of rules. I talked about a stop loss. Well, they use a stop loss on every single trade. You're going to use aggressive risk management. That means you're going to trail your stop, trail your stop, trail your stop. You're going to be looking at the market under a microscope. We're scalping. We're on a 4-tick range chart. So you really have to be engaged in what the market's doing. You'll have to be in front of the screens, and you'll have to be watching the markets. So you'll be paying attention. We don't trade around news items. Okay, so if there's unemployment or retail sales or something coming out at 7:30, hands off the mouse. You're not going to do anything. As far as a surprise tweet or something or news, well, nobody has control of that. The good thing is if it does happen, and you do have a stop loss in, and for whatever reason it does hop over that stop, because that is a possibility, the plus side of that is you're in front of the screens, you're in front of the DOM, which is this tower here, and if you need to get out, all you have to do is hit this exit at market and cancel button to get the heck out of Dodge. Okay, so you'll have the ability to get out and then take a deep breath and say, what the heck just happened? Okay, so again, it comes back to having a trading plan. It starts there. Okay, and like I said, with CFRN, you are going to have one. Okay, so does it water the disclaimer down a little bit? Yeah. Does it eliminate it altogether? No. Okay, but again, at least you're engaged in front of the screens and you have a plan and you're using stop losses, which are really good things to have. Okay, the other thing you have to talk about, past performance is not necessarily indicative of future performance. Okay, not much else to elaborate on that, but you know what? It has to be talked about. I covered and checked that box. Okay. What else? What about this? I have to go over the relationship with CFRN. Okay. Um, how can I talk about this? How's this? CFRN. Okay. They are it's their indicators. Okay. You see them here. This is DT Pro. This is the platform I support. Their indicator set is built inside our platform. Okay, these are all their indicators. Okay, with a click of a button, really all you have to do is add them to it, to the platform or to a chart. Okay, they're the educator, they're indicators. Okay, they're a third party. Okay, we do have a relationship with them. Okay, I support the platform. Okay, DT Pro, this is what you're looking at. You decide to go down the CFRN path, and you decide to use us as brokerage or execution, I handle that part. If you're having trouble downloading the platform, downloading the indicators, you have questions about execution, you will reach out to me and I'll take care of that. If you decide, hey, I'm going to be a CFRN partner, who do I pay, how do I pay, that kind of stuff, you're going to reach out to them directly. So there is a line in between us. I don't work for them. They don't work for us. There's no commingling of anything. Okay. So that's kind of how the relationship works. You have a question about the training videos on their site. Logic 247. The swing alerts, the daily doubles, the concierge trade alerts, that kind of stuff. You would reach out directly to them. Valerie is a good asset to the company. A lot of people reach out to her. She flips switches and connects with you and troubleshoots some of that stuff. Okay. In the end, if you are trying to get a hold of Michael or Dwayne and you can't, a lot of guys will call me and say, hey, can you reach out to them and tell them to call me? That's fair game. Okay. But to call Bert and say, hey, I don't see any videos, or who do I make a payment out to? That's not my category. That's directly to them. That's CFRN. Okay. So the highlight of this screen really is, okay, it's a third party, it's indicators, their software, it's their trading tools. Okay, they're the educator. Okay. And that's what this disclaimer really outlines. Okay. And then, that kind of outlines our relationship in a nutshell. To scratch the surface a little bit more, about 10 years ago, Dwayne asked me to come on the radio program when it was just radio, and it was just talking about markets and answering questions and trade-related items. The one thing that I noticed, the inbox would fill up a lot of questions about, hey, Dwayne, can you teach us how to do this? Can you teach us how to trade? Can you do this? Can you do that? And he got together with Michael, and him and Michael are trade station developers, and they put it together. And it just so happened that DT Pro reads easy language. You can code inside of it. So it just happened to be at the right place at the right time, and we kind of all have our roles. Okay, Dwayne does the radio, and he does the Logic 247 and that product, right? Michael does the training room. I support DT Pro. I do a CFRN Thursday skit to educate and talk about the trade setup. So we all got our little roles that we play. Okay, and I think it's been working out. So it's a good team. It's a good fit, and that kind of outlines our relationship. So those are the things that I have to talk about before we can get started. So we covered that. So now we're going to, the guys that are brand new, we're going to talk about the trade setup. Okay. So let me get my highlighter here. And the first order of business is the time frame. Okay. Michael's charts are on a 4-tick range chart. Okay. So if you have DT Pro, how do I get to a 4-tick range chart? So chances are you're on a time-based chart. You might be on a 30-minute if you're watching Logic. You might be on a 5-minute chart. You might be on a daily. The point is you're going to get to a 4-tick range chart. So up in the upper left-hand corner of the chart, let me pull this up. Yes. There's a little drop-down box, okay, next to the time frame you're on right here. Left-click on it and go down to Custom. Another box will open up and select Range Bar. Say, make that one look like a 4 and hit OK. You're staring at the ES. That's S&P E-mini on a 4-tick range chart. Okay, that's what the chart should look like. All right. The first trap that people fall into is they go down to Custom, and they end up selecting tick bar, and they end up turning that 2 into a 4, and you're looking at something goofy like this. Again, if you're staring at this, this is dead wrong. So the tip off really is at parentheses and R. Okay, 4 ticks in it. Little parentheses tells you it's a range bar. And the importance of that really is, in a nutshell, is that each candle is 4 ticks in height. Some look bigger, some look smaller, but in the end, they're all 4 ticks in height. And the reason that's important is because Michael inside the trading room can be proactive in placing his orders. Okay, and you're going to hear this a lot. Okay, so when Michael is starting to call out the highs and the lows of the current candle, okay, this might be a current candle here. He's calling out the highs and lows. Okay, then chances are he's getting ready to place an order in advance. What does that mean? That means the market's right here at 29.26, 29.26 and a quarter. If all the rules apply, okay, and I'm kind of fast forwarding this thing, but if all these rules apply, okay, then what he's going to end up doing is placing a buy stop above the market or placing a sell stop below the market. Okay, so if the market ends up taking off, he's going to enter in on a stop. If the market ends up breaking down, okay, depending on the trend, then he's going to end up getting in on a break. Okay, so that's his way of being proactive. He can kind of predict the closing candle. And so sometimes, I know in the beginning when this all started, a lot of times he was getting into trades and the market would end up taking off. And everyone's like, wait a minute, how did you do that? There's no way you got into that trade. Well, the reason he was doing it, able to execute that, it was because he was getting in on a stop. The market would just take off and take off through his buy stop, getting him into the trade. Okay, so the advantage of 4-tick range is so you can be a little bit proactive in placing the order. Okay, so when Michael starts calling out the highs and the lows, and you'll hear this, trust me, if you're brand new, you're going to go, what is he talking about? He's getting ready to place an order. Okay, so just a little warning. Okay, so in the end, there's 2 ways you can get into the market, like Michael does proactively: buy stop, sell stop. Or when everything qualifies, you can simply go into the DOM and left click to get in, or left click in the green to buy it, or left click in the red to get short. Okay, just depends on you. Okay, depends on your comfort level. All right, all that said, we're talking about getting that chart on a 4-tick range chart. Okay, so all right, so now we got the time frame cooking. So now we're going to concentrate on the top portion of the chart. Okay, so here we go. Some buzzwords here. This red and blue line here is referred to as the MA1. Nothing really fancy about it. It's just the MA1. Why? I have no clue, but that's what it's called. The green line is called the BBC, and that is short for bullish bearish cross. And why is that important? Because that kind of leads us into step number 1, which is this. When the MA1 crosses the BBC and the MA1 is red, that is a bearish cross. If the MA1 is blue crossing the BBC, that's a bullish cross. The one that is highlighted right now, right here, is a bearish cross. Why? Because the MA1 is red. Okay, so we have a bullish and bearish cross. That is step number one. I want you to take note, especially if you're new. I didn't say go short, go long, go short. Okay, I said is from after the cross, we're actually going to be looking for bearish, bullish, or bearish opportunities. Okay, if it's a bearish cross, we're going to be looking for an opportunity to go short. Where you get a bullish cross, we're going to look for an opportunity to get long. Okay. All that said, that kind of leads us into step number two, which is this. After the cross, the normal thing for the market to do is gravitate toward that green line of the BBC. That's the normal thing. So you're looking for normal after that cross. Okay. Not only looking for a touch, the green line or the BBC, but then you're looking for a close in the direction of the trend, highlighted here. Okay. So that is step number two, a touch and a close in the direction of the trend. Okay. If we have a bearish cross or a red MA1, then you're looking for a red candle. Okay. If it's a bullish cross, where the MA1 is blue and crossing the BBC, then you're looking for a green candle or a blue candle, depending on how you have it color coordinated. Okay. So that is the normal thing. That's what you're looking for after the cross. Okay. Now, what's going to end up happening is sometimes, okay, the market has so much bullish and bearish momentum, it won't get to this green line. Okay. It'll get halfway, like it does here, and kind of fall apart or react, right? It does it here too. Doesn't quite get there, but then reacts. Okay. That is going to happen. All right. So what we're going to teach you and what I'm going to pound on this afternoon is, as soon as you get this cross here, you're going to get in good habits and you're going to get in the habit of drawing a trend line. Okay. Because if this does happen, where we can't get to the BBC and it falls apart, at least you're going to be in a position to take action if it does. Okay. So again, to rewind the tape, first thing that we're doing is we're looking for the cross, which is step number one, a bullish or bearish cross. The one that's highlighted is a bearish cross. Then we're looking for a shorting opportunity. Okay, that's step number two. We're looking for normal, the market to gravitate toward the green line and then close in the direction of the trend. Okay, while that is happening, we're drawing trend lines. Okay, in the event that the market cannot get to that green line like it does here and then falls apart. Okay, that's the game plan. Now, one of the big questions I'll get is, hey, let me erase all this. I just place an order right here. Let's get short if this is the normal thing. Well, sometimes the market will do this, just slice through it. Okay, and so you avoided a stop loss. Okay, so what we're doing here, okay, on that down close, we're substituting price for action. Substituting price for action. Okay, this is a clue that maybe the market is doing the normal thing. It's getting back to the BBC and it's failing like it's supposed to do. And with this, okay, there might be action to take. Okay, so that's why we do that. That's why we don't just flat out place an order here, because the market could just take off. It does. Okay. All right. So we have step one. Okay, the cross. We have step two. We have the pullback to the BBC, but then we also have the down close. So now our eyes are going to gravitate toward the oscillator portion of the chart, which is called the slingshot. Okay, so some of the buzzwords or components of the slingshot. This red and blue line is referred to as a cycle. Okay, the green line, it's just called the green line. Nothing fancy about it. But the separation, okay, between the green line and the cycle is step number 3, or the separation or the divergence that Michael is talking about in the training room. Okay, in the beginning we called it divergence. Now he's calling it separation. It's one and the same. Okay, but here's the backbone behind that. Okay, the trade exists down here in the slingshot, and I'm going to tell you why. Okay, the cycle is red. It's pointing down. It's saying, look, the NASDAQ on this 4-tick range chart, okay, in this time frame, it's bearish. It's got bearish momentum. Okay, that's what this is telling us. The fact that it has a nice slope to it is even more convincing that the momentum is slipping and going down. Okay, the market's a little bit bearish here. Okay, the green line pulling away along with the market action up here, which is normal, right, is a suggestion that this is just an air pocket in this ongoing downtrend. Okay, this price action up here combined with the green line is saying, hey man, this is just a pop-up in this ongoing downtrend. Okay, and the fact that the market gets up to the BBC and fails, and the green line is pulling away from the cycle like a slingshot, right, like pulling the rubber band back, okay, are all the variables to say, you know what, hey, it's time to get short. It's time to get inside the DOM and push a button, okay? And like I said earlier, the trade exists in this slingshot because what do we expect to happen after the pullback, after this green line gets pulled away from the cycle? The normal thing for the slingshot to do is for the green line to pull away and then get into the cycle. Pull away, get into the cycle. Pull away, get into the cycle until the momentum is blue. It changes, right? So we're looking for a market. We're looking for bullish setups. So then we're looking for a green line, create bullish separation through this, okay? And so in the end, what you end up doing is selling this top, selling this top, selling this top, buying this dip, buying this dip. Because the normal thing for that green line is to get right into the cycle. And so what do we expect price to do up here? We expect as the green line goes down into the cycle, market's going to make a new pivot low. And when that green line pulls away and then gets into the cycle, this is the point where we get out of the trade. This is where we exit the trade. Okay? Because this green line is going to pull away again. Okay? And then the market's going to go up and then make a new pivot low. And then the green line is going to pull away and then the market's going to react. Okay? So that's what we're doing. Okay? And along the way, every trade has an 8-tick stop attached to it. Okay? So if you're brand new, this is your first day. If you're trading the gold or the crude, if you're dead wrong, you're risking $80 a contract. If you're trading the ES or the soybeans, you're closer to $100. If you're trading the mini Dow, it's closer to $40. If you're dead wrong, okay? As I said earlier, okay, you're going to learn to use aggressive risk management. Okay, I'm going to go over the risk management once we find some trades to get our hands dirty with and execute them. Okay, but the bottom line is, as soon as the market gets 4 ticks in your favor, okay, 1 candle length, right, you're going to move the stop to break even. Okay, so you have this pull away, right? This is normal for the green line. Pull away and then get into the cycle. So this should happen here. Okay, price action. For follow along, we get short and we move the stop, move the stop, move the stop, move the stop until it's time to get out. Okay, that's the game plan. So if you're, again, this is your first day. Again, this is the eyes wide open approach to this. What am I signing up for? Okay, well, number one, I'm in a 4-tick range chart. Okay, so you're looking at the market under a microscope. So you're going to be glued to the screens a little bit. You have rules here. 1, 2, 3. Michael will outline 4 or 5 rules in the training room. Okay, there's basically 3. The one that's missing is the market should be trending. Okay, if there is something that you're going to put on the top of your little piece of paper today, nothing happens until the market is trending, period. Okay, if we're not, we don't push any buttons, we wait. Okay, so you're going to be glued to the screens. You are not going to learn to pick the top and the bottom here and trade it from point A to point C. Nope, you're not learning that. What you're learning is to take a piece out of the middle. Okay, and you're going to be using aggressive risk management along the way. So that means you're going to be scalping. Okay, you're going to take little pieces out of the middle. You're going to be on a 4-tick range chart, and you're going to be using aggressive risk management. So that means you have to be, you're going to have to know the platform pretty good. Okay, you're going to have to do a lot of practicing. Okay, you're going to have a lot of stop outs. You're going to have a lot of trades. Okay, all those things are going to come into play. So that's what you're signing up for. Okay, so if you like that kind of thing, okay, maybe this is a place for you, maybe not. That's up to you to decide at the end here. Okay, but again, the idea of the webinar here is, number one, show you the setup, because this is what Michael's doing every morning, and set expectations. What are you signing up for? Okay, so that's the scoop. All right, so we are going to look for this same setup in this environment right now. Okay, so this is the DT Pro platform. This is the platform that I support. Okay, and we're going to go looking for setups. Okay, and what I'll do is I'll end up going inside the DOM. This is called the DOM, depth of market. This tower here is where we do our buying. Okay, we buy in the green, and we do our selling. We sell in the red. Okay, that's what we're going to do. Okay, as I said earlier, the first thing, or that number one thing that should be on your piece of paper at the top of the page should be, are we trending? Actually, this is easier said than done and look at, because a lot of people fall into this. There's a big trap here. Because sometimes what happens is, when you're in the training room, you're looking at Michael's charts, right? He's got 3 or 4 charts floating. And like I said, you're looking at the market under a microscope, okay? It's kind of blown up like this, okay? What I want you to get in the habit of doing is hitting the zoom out button right here, okay? I want you hitting that zoom out button. If you do this, 1, 2, 3, 4, this will tell you whether or not, or help with whether or not a market is trending, okay? So right now we have some lower lows here, right? We had a bearish cross here. By the way, this is the S&P mini on a 4-tick range chart. Okay, we had a bearish cross here. The MA1 is red and crossing the BBC. What's the normal thing for the market to do? After the cross, gravitate toward the BBC. That's that green line there, right? Not only are we looking for a touch, we're also looking for a down close. That red candle is a down close. All right. Our eyes gravitate toward the oscillator portion, or the slingshot. We have divergence. Well, the cycle is red, and the green line is pulling away. So we have that separation, right? Okay. So all the ingredients are there. All right. Not only that, try this. We close below this little uptrend line, right? It's that trend line that, okay, we're close right below it. So actually, right now, potential shorting opportunity here. Okay. So what did I just do? Okay. So we had the bearish cross. I just left clicked in the red to get short. Now what's cool about DT Pro is see the top of the DOM here? See, I keep pushing this little Tinker Toy triangle. Notice how the bottom of the DOM opens up? This is called a bracket order. You can actually place, this will automatically place our 8-tick stop behind our trade, okay? So if you select buy stop and sell stop, and you right click over it and put factor in ticks, find buy stop and right click, put factor in ticks, make that factor look like an 8. As soon as you get into the trade, it will put your stop loss 8 ticks behind it. Here's our stop loss right here. All right. If I go up to here, and this spot should always be open in my opinion. Okay. My working orders here, there it is. That's a stop loss. Okay. It's the same one that's up here. Okay. That's a stop loss. So we're short from 29, 24.75. Not only is it highlighted here, it's also highlighted here. Your P&L will start moving. That also lets you know. And you also got this big fat red line in the middle of the chart that lets you know that too. So there's plenty of areas that says, hey man, you're short the market. Okay. All right. Rules of engagement. Okay. We will move the stop down to break even as soon as the market goes 4 ticks in our favor or closes on the other side of the MA1. That MA1 is this red line here. Okay. With this candle here, we will move that stop to break even. Okay. See what I just did? I dragged and I dropped our stop down to break even. Okay. Left click over it, drag, release. What do we expect to happen? We expect the green line to do what? Normal thing, green line to get into the cycle and the market to do what? Make a new pivot low, right? That's the normal. Okay. Well, our stop loss is 2 ticks in our favor and it just got tripped. All right. So basically we got short here and we got stopped out with 2 ticks in our favor right here. Okay. So again, why did we do that? Number one, we identified the market was trending, right? What does trending mean? The market was making lower lows, right? Making lower lows. Okay. Another way, see the green support dots? We broke support. We broke dynamic support. That's another clue that we're trending. Okay, so if you're unsure, lean on support and resistance dots to let you know if we're trending. Like we'll talk about that in the training room. So we had the bearish cross here. I kind of set the flare, everything in motion. So now we were looking for shorting opportunities, right? Okay, once we took out support, we knew, hey, the normal thing for the market to do was to gravitate toward the BBC or that green line. In the process, we activated the trend line and we drew it. Okay, we didn't know if it'll get here or not. We drew it. Okay, not only did it get there, it actually had a down close. So step 2 was in play right here. Okay, so our cycle was red and the green line was pulling away. So really there was nothing left to do but to go inside the DOM and get short here, right? That's why we did what we did. And then what we did is we set up an 8-tick stop. Okay, so our stop was right behind us every step of the way. Okay, and as the market went down, our money management said, look, if it goes plus 4 ticks in our favor or closes on the other side of the MA1, then you need to move the stop to your entry, break even. Well, we did that too. Okay, along the way, I moved it a few ticks in our favor because we were pounding on the previous pivot low here. That's why I did that. But in the end, what we expected to happen is this green line to ultimately come down like it did here and get into the cycle, and the market makes a new pivot low. That's what you expect to happen. Sometimes it doesn't. That's why we have to move the stop down. Okay? That's what you can control. So actually that worked out well because that was right off the bat. We kind of stumbled onto that one. But that's it in a nutshell. That's the trade setup. Okay? So let's just move on to another one. Let's go to crude oil. Now you should be in October crude, by the way. All right? October crude is GCL Victor 19. All right? First question we ask ourselves, okay? This is just routine and habits, okay? Same thing over and over and over. You're just training your eyes to look at the markets, okay? Are we trending? Bert said to hit the zoom out button so we can look at more to the left. We can look at more, I'm missing the word, okay? This is blowing up. Okay, sometimes we get hypnotized by this, but if you zoom out, you can see more of the landscape of the market. Obviously, this one's a pretty easy one. It's making lower lows. And as I said earlier about that S&P, you notice how we knocked out dynamic support? That's a pretty good clue that we're trending. Okay, now after the fact, let me blow this up here, right? Let me get rid of this guy. Here's the bearish cross, right? Okay, we're looking for shorting opportunities. What's the normal thing for the market to do? Gravitate toward the BBC. Okay, we don't know if it's going to get there, right? The next course of action is to activate your trend line. Okay, right here. See here? Left click on that. That activates your trend line. Okay? Once you do that, and we start flagging or gravitating toward that BBC, it's time to draw a trend line. Okay? When you're in the training room, you'll see Michael do it a lot. You'll see trend lines all over the place. Okay? Because you never know if it'll get there. Okay? So in this case, we actually try to do it and we close below it. Okay? We close below the trend line. Not only that, we had a red cycle and we had separation, right? We have that separation. What's a normal thing for the market to do? Well, the normal thing for the green line to do is to get into the cycle and for the market to do what? Make a new pivot low. This isn't the point where we get out of the trade, right? That's it. Okay, that's good stuff after the fact. We have another setup. Okay, the market's trying to gravitate toward the BBC. Okay, we have good discipline, so we're drawing a trend line up. We're going to close below it. Okay. Here's the difference. We don't have a red line. Okay, before I gave you two clean examples where we had red cycles. This one has a blue one. Okay, so what happens? Well, there's a little bit of a change in tune here. Okay. If the cycle turns color on you, as it does here, as long as it's not at a 45-degree angle against you, okay, as long as it doesn't look something like this, okay, if it's flat, that's okay. as long as it's not curling up against you, okay? As long as we close below the trend line, like we do here, you can get short the crude, okay? So let me go over that again. We get in the habit of drawing the trend line because we never know if it'll get to the BBC. We get the close below. It's right here, okay? Our eyes are focused on the slingshot. Blue line, trend line is required. A close below the trend line is required, okay, before we can take action. Your eyes or your thought process is in, if it's flat, cool, we can take action. If it's curled up a little bit, then we don't take action, okay? That's your thought process at that point in time, okay? If there's any doubt whether this thing's curled up or not, don't push any buttons, okay? It has to be easy and obvious, meaning it has to be flat. There has to be no guessing, no what if this, well, it kind of, no. If that's what's going through your head at that point in time, don't do anything. Okay, the point is it's got to be easy and obvious. Okay, that's a close below the trend line. That's a trade that Michael would take in the training room, and the idea is for that green line to pull away, ultimately get into the cycle, and this is the point where we would take profit. Okay, not going on with that one. Okay, so we'll see some more examples. Okay, so we're gonna move on. Okay, here's the natural gas in September. Notice the first thing I did, I didn't even say anything to you guys, is I hit the zoom out button, because that's what I've trained myself to do, and that's what you should be doing right after this webinar. Okay, right here, you're like, holy smokes, we got a bearish cross. Okay, that MA1 is red and crossing the BB, so you're getting excited about, hey, I'm going to get short this natural gas here. Zoom out, zoom out, zoom out, zoom out. Not so fast, okay? We got support here. We got resistance here, okay? We're stuck in a little bit of a range here. This is one of the traps that people fall into, okay? They get hypnotized by this, but if they went 1, 2, 3, 4, okay, they may stay out of some chop. If you just do that a few times, 1, 2, 3, 4, okay, then you might find yourself, hey, I'm in a bigger sideways channel. So Mark, to answer your question is, no, we're not trending. We're just sideways. Yes, we have the cross. Yes, I should be thinking getting short, but I should be thinking about, holy smokes, I'm at support here. I got to be looking out. That's not a high probability setup for me, okay? You have lower highs. You don't have any lower highs here. You have support here. If we start going below this level, then absolutely, your thought process is absolutely correct. You're seeing this, which is a good observation, but now we're doing this. We're sideways. So we have to be making a lower low for this to activate, okay? And not only that, I was just talking about trend line stuff, but do we have any bearish separation, okay? Is the green line above the red? No, it's just starting. This is good. This has got a good slant to it, okay? But we really need this green line to be on the north side of it, okay? It needs to kind of look like this, all right? I wanted to highlight that because it just popped up, and it's not necessarily trending, and it's not something I would get excited about. And if I'm not excited about it, you shouldn't be either. But that was a good point, Mark. I'm glad you said that. All right, so gold. Okay. First thing we do, zoom out, zoom out, zoom out, right? Oops. So the question is, are we trending? Kind of like the natural gas, Mark. Okay. Doing one of these. Now we kind of broke out, right? So maybe we have some action to the upside in the gold. All right. So right now, I don't see a setup right now happening. The green line is getting into the cycle as we speak. But after the fact, okay, again, going just through the motion, here is a bullish cross. The MA1 is blue and crossing the BBC. Okay. Our thought process is engage the trend line. Okay. Because we know after the cross, the normal thing for the market to do is to gravitate toward the BBC. We don't know if it's going to get here in this point in time, but we're drawing trend lines. So we end up doing it. It does actually touch the BBC and close in the direction of the trend. So this kind of lights the match. Okay, that's a good bullish close. So then our eyes gravitate toward the slingshot. It's a green line pulling away. It does. Uh-oh, the cycle is red. All right, so two things go, and our thought process goes like this. If the cycle is red, a trend line is required. Okay. Number two, if the trend line is required, then we have to close above the trend line. Okay. That doesn't light the match. It's this candle that lights the match now. And the reason is the cycle is red. Okay. The cycle is red. What's the slope of this? Is it flat or is it curling down? It's flat. Okay, so that's fair game. So that's fair game, meaning we can actually take action. Okay, so the close of this candle here, we would go inside the DOM and we end up left clicking and getting long. Okay, that's what that suggests. Okay, so you're long the gold here, right there on that, keeps moving here, on this candle here. All right, and as a result, it's starting to move up. All right. So let's look at something in real time and not, I hate looking backwards too much. We need to get our hands dirty and feel the pressure. Go back to the indices. Okay, here's a good example. Okay, I wanted to point this out. Glad it's happening now. So I'm gonna, normal thing for the market to do is pull back to the BBC, correct? Here's a down close. Okay. Here's a blue cycle, so the trend line is required, and a close below the trend line is required. So we get excited about this candle here, right? However, the cycle is blue. All right. Number one, if it's a different color, it's watering down the probabilities on the trade. You should mark that down. Okay. Number two, okay, if it's curled up at a 45-degree angle, okay, then that is a big fat no-go. Okay, that's a disqualifier. Now you may look at this and say, no, that's not necessarily 45 degrees, maybe 30 or 25. I would say if it has any kind of curl to it, okay, number one, you know this is already watering down the probabilities, right? But if it's starting to curl up a little bit, don't push a button. It's got to be easy and obvious. Easy and obvious is this. A red MA1 in the direction of the trend. It's got a great slope to it, and the green line's pulling away. This is what you're looking for here in a short. If you're looking to get short. This, no. You're asking for trouble. Okay? Okay, so if the cycle turns color on you, you should already know, oh shucks, this waters down any kind of probabilities. Okay? So buyer and seller beware. Okay? And then secondly, if it's curling up, you just don't push any buttons. Okay, a Momo trade just showed. Bart, a Momo trade just showed. Yes, I think I know what you're talking about there. I think Bart was highlighting probably this one. That might have been a Momo trade there. Actually, here too. That would have been another one. So there's been several examples. I think you're right. So Joan's question is, so even with a BBC touch, okay, if the cycle turns color, The trade must wait for the next candle. Okay. Either way. Okay, so once you have the touch, okay, you're waiting on the next candle unless it's one and the same. Okay, so see if I can. This was the touch. Did we have a down close? No. Here is the down close here. So you are looking for a close in the direction of the trend. Okay. And then as soon as you get the reaction off the BBC, then your eyes are gravitating toward the slingshot. Okay. Let me see if I can find an easier one to go over. Okay, Joan. Let's find something easier to go over. Fact here. Take a look at what we got going on now. We have a higher high here, right? So the market is trending. We have a bullish cross, right? Bullish cross is right here. So our next order of business, activate the trend line over here, right? Let's do it. Left click, our trend line's getting ready to draw. Okay, we're getting ready to draw a trend line. Okay, so from this point, we're looking for a buying opportunity. If that presents itself, we're going to get inside the green and left click. Okay, the normal thing for the market to do, everyone, gravitate toward the BBC. What's the BBC? This green line. Okay, we get another red candle, as we do here. We start drawing a trend line. Why? Because we don't know if it'll get here. Okay? If we get a close above the trend line, we have a bullish cycle, and we do have separation. If we get a close above that trend line, we will get long. Okay? Because we have the divergence. All the rules apply right now. So we are just in waiting mode. That is not a close above the trend line. Okay, so we're waiting for it. So here we go. This is the point where Mike can be proactive. If the low is 28.75, then the high must be 29.75. He can right click at 29.30 and get long. Okay? Now, I don't want you to do that. Okay? I know there's a couple reasons, but there's two reasons. One, we have dynamic resistance printing. Those guys that are CFRN members know that. And will be above the MA1, which is also a MOMO trade, the momentum trade. We're going to talk about the easy and obvious ones here. Okay? All right. A little bit of a twist here. It's just kind of cool that it happened. We're going to adjust the trend line. Okay? Started here. Now it's here. Okay, we still have the bullish divergence. We have a blue cycle, so all the probabilities are stacked in our corner. Okay, we like this setup, but we're waiting here. Okay, your trend line should have started like this, off these two highs. We didn't get a close above. Now it's adjusted for that wick. The market is doing the normal thing. As long as this is blue and we touch the green line and we have an up close, getting closer. So hold on, Joan. This might answer your question right here. Got to touch this.
Yeah. This is not a real. Oh, I know. Yeah.
We're looking for it to touch the green line. Come on, touch the green line so I can answer Joan's question right here.
Okay. Oh, that's awesome. I didn't know that.
Let's watch it paint dry. Of course, the market's crazy this morning, and then it kind of falls asleep here, and that's why I can do this in slow motion, by the way. That's why I picked the 1 to 2 o'clock time frame. This market's kind of fall asleep around this time. So the question is, should you be trading between the 1 and 2 o'clock trading time frame? Probably not. Things get kind of slow. Okay, we're just looking for it to get to the green line. Here's our trend line. Okay. Come on. All right, give us a down close. Come on. Let's answer Jones' question right here. Okay, again, this is good for the home team. It's blue, and we got separation. Okay, as long as it's blue, that's good. It turns red on us. This turns red. Cycle. And we didn't get the. All right, so we're still waiting. Okay. We have to touch the BBC. So hang loose. Okay. All right, this might end up being a momentum trade, and I don't want it to be a momentum trade, and then I'm going to have to scratch the whole thing and look for another one for you, Joan. In fact, it's trying to do it now, so let's see what happens. All right, so we're touching it now, okay? See the touch? So we get the up close. All right, so I left click. I don't want you guys to do anything because a little bit of concerning here, but just hang with me, okay? So Joan, this is exactly what answers your question. The cycle is blue. We have the separation. Not only did we touch the green line, but we actually we had a bullish close. So it also could be the same candle. Okay, that's my point. That's what I wanted. So it could be the same candle, or you wait for the next one. In this example here, we needed not only that one, but we needed this one to activate it. Okay, because that was the close in the direction of the trend. Doesn't matter what color this was, it has to close in the direction of trend first. Okay, and then, hey, if this is a different color, then I need the trend line. Okay, this one we don't even need the trend line because this is blue. Okay, well, why did you draw the trend line? Because we don't know. What if this would have turned red on us? Or what if it didn't get here and it closed above the trend line? We don't know these things. It's after the fact. Okay, so what I did is I left clicked and got long. I left clicked in the green. Remember, I have a bracket order in, pushing this button here. This is our stop loss right behind us. Okay, that's called the bracket order. You're not sure if you're long or not, right here, your P&L will start moving. And on the graph, the chart, big fat green line saying, hey, you're long. Okay, so different areas where it tells you. And also, like I said, I think everyone should have this box open. I don't have it open now, but if you go to trading, position and order management, go to working orders, here's our stop loss. It's right here. Okay, it is the same, 29, 26.75. It's also right here. Okay, all right, rules of engagement. If it closes on the other side of the MA1, holy smokes, we're already above it now, but we haven't closed, or 4 ticks in our favor, we are going to move the stop to break even. Question I always get, what's break even? Your entry. Okay. Correct, Joan. So if the cycle had turned red, the trend line must be used. Correct. Even with a BBC touch. Even with BBC touch. Correct. All that is correct. So Joan, if you get in the habit of drawing that trend line in advance, and this thing does turn color on you halfway through it, okay? Hey, then you already have it drawn. You're not fumbling around, okay? Now the market is giving us grief here, and the reason why I asked you to hold off, because the cycle here was starting to curl down a little bit, okay? And that was concerning me. Don't worry about that, you guys, right now, but that was a little concern. Again, ideally you want everything to be the same color. MA1 blue, Cycle blue, everything the same color, puts everything in your corner, okay? So, but anyways, we're just learning the basics here, okay? You'll pick up on this other stuff later, okay? The fact that this was red and going down pretty steep, okay? And I knew that the entry was going to be right about where that MA1 is either going to blast off here or it's just going to roll over on us. It's a 50-50 proposition here. But the idea is I wanted to really touch base on what Joan asked, and we'll see what happens, okay? So we had the close above the MA1 here, right? Well, now I'm in a position where my entry is. Now what do I do? And now I have a line, a green cycle, right? That's a green line. It's in the cycle. That's why I was like, hey, you know what? Just cool your jets here. So, well, what would you do, Bird? Watch this. Exit a market and cancel. Just get out of the trade. If you're following the rules, that's what you should be doing. Okay? That wasn't an easy and obvious one because of that cycle turn. Okay? Again, this thing can just shoot out of the hole here. Okay? It could. It's starting to do it now a little bit. But I'm trying to keep you guys basic and keep you within the rules. So, all right. But I think the takeaway here is Joan's question. That's good. Okay. This is good. Okay. The up close. See if you ignored that and this was the down close. And then the next candle was the up close. Okay. Sometimes it's the same candle. Sometimes it's the next candle if you don't know. This is good. This is good. Okay. There's a lot of good things going on here. Okay. Again, that was my only concern of just, let's call it quits. All right. Let's go over to a currency because let's just check it out. Are we trending? 1, 2, 3. Right now, no, I wouldn't get excited about this because we have, if I do this, you might say, hey, we're going higher highs, right? If I do this, well, no, we're chopping around here, but on a larger time frame. British pound, same picture. We were chopping around here. Okay, you didn't see that like this. Okay, you see it zoomed out. We are making higher highs, and we did break dynamic resistance here, right? So to me, that's trending. We broke dynamic resistance. Joan, we draw the trend line. Okay? Man, that is sloppy. Hold on. That's your trend line. Okay? Here's your red color, right? This tells us watering down probability. Okay, it's actually curling down a little bit. That's a concern. But we do have separation, right? We have space in between here. All right, so there is a potential opportunity here. All right, so Joan, because that is a different color, and a close above the trend line is required. Doesn't have to hit here. If it does, it does, but has to close above the trend line before we do anything. Okay. And the reason is this is red. Okay. That kind of just reinforces what we were just talking about a few minutes ago. Okay. You get in the habit of drawing the trend line, boom. Then your eyes can just gravitate to what's going on down here. Okay. All right. Let's take a look. Okay, sideways action. Okay, back and forth, back and forth, back and forth. All right, let's. Man, it's 2 o'clock. Let's see if we can do one more. I'm just gonna skip. Okay, we're starting to get the bearish cross in gold. Minimize, minimize, minimize. Okay. Man, I'm getting some emails. Okay. I'm not so sure about this. Let's go to, let's try a different currency. Lower lows. Here's the Mexican peso. Okay, that's potential short. Canadian is sideways here. Notice dynamic resistance side by side. The euro, dynamic resistance side by side. All right, one sec. Phone's buzzing here. All right, so I'm back. So anyways, we were talking about potential setups here. So I got distracted by that phone call, and I told you that would possibly happen, and of course it happened toward the end of the session. So, you know, what I'll do is, let me just take one more look. So not much is going on here. Let me see if I can't see something that looks just really easy and obvious. Okay, again, another reason that you draw a trend line. Not that you would take action on this, but that's one reason why you do it. Okay, you never know if it'll get back to the BBC. But we are at dynamic support, so that's nothing to get too excited about. Okay, let's go to the NASDAQ. That is trending. Notice how we had found support here. Okay, dynamic support, and we finally just broke it. All right, so this tells me, hey, if the NASDAQ pulls back, all right, so hold on. What was that? Okay, so now we're going to look for the market to gravitate toward the BBC. Okay, so our trend line is now activated. It should look something like this. Okay, this turned color on us. The trend line was required, and that's the close below the trend line right here. Okay, now you notice how the NASDAQ is basically untradeable on the 4-tick range. Okay, it's almost impossible to trade. So the fact that we're talking about this, here's the solution. If you are a NASDAQ and a YM junkie, you just have to trade those contracts. And the idea would be to go to an 8-tick range chart and slow it down. The same rules apply. Okay, the same rules. Bearish cross, activate the trend line, draw the trend line, close below the trend line. Is the cycle red? Yes. Do we have separation? Yes. Okay. Same rules apply. That lights the match. Okay. Question is, are we trending? Okay. We are making some lower lows there. So yeah, a valid setup. Okay. So the only thing that changes is that your buy stop and your sell stop is not 8 ticks, it's now 16. You have to double it up because you doubled up the time frame. Okay, so this nonsense of trying to trade this one on a 4-tick range, you can really put it in first gear, maybe second gear on an 8-tick range chart. Okay, 8-tick range chart. How do you get it there? The drop down box, custom, range bar. Instead of 4, change it to 8. All right, and then you're on your way. Okay, so I'm gonna leave it at that. What times in the afternoon would you trade? Toward the end of the day, I'd be on alert status at 2:30 as we get closer to the cash close. You get some craziness going on there. Bart. The morning is when you have all your news reports and things are moving around. So that 8:30 to 10:30 window that Michael's in is kind of the sweet spot because that's when you get all your movement. And then we kind of go into this lunch hour bit. That's why, again, I do this between 1 and 2 because I know it's not going to be too crazy. And I can do this in slow motion. But after 2 o'clock, and as we get closer to the close, you know, there's going to be some people positioning, you know, squaring away positions and stuff like that. And sometimes you get some movement then. So anyways, all right. So I'm going to shut it down. I recorded this. I need 24 hours to get it on YouTube. And then you can review this. Again, We do this every Thursday. Last week, my GoToWebinar thing was all screwed up, so I couldn't even get it going. But we'll try to be consistent with this every Thursday. Go hammer the details over and over and over and over until you just get used to it. Okay? Got questions, call me or email me, or just show up every Thursday, and I'll be in the room every morning in the background.